buy the dip, buy the dip, buy the dip. Why the stock market hasn't crashed? Very low earnings expectations. It is because there are so many buybacks, and this is what sends the share price up. Stock market is twice more expensive than entire GDP of entire world. Other companies, smaller companies that are already going down, they're all crashing already, and all they need, because they want to take profits, is just one small bad news. In Netflix, it was relatively not maybe small bad news, but it was still kind of bad news. The growth slowed down, they were not able to slow down this growth, to slow down the decrease, I mean, in this case, and share prices went down by 20% in as little as just one day. And to be honest, just in couple of days, the share price of Netflix went down so much, then just these 2-3 days of share price behavior sent back the share price of Netflix as a company all the way back to 3.5 years. Just imagine, 3 days of market of the share price going down, and you are back when you were like in the June of 2018. So because as you can see from this slide, and these are the numbers by the time I'm recording this video. So maybe while you're watching the video, or whenever I'm gonna upload the video, the share price will be even higher or even lower, I don't know. This is just the number that I saw when I was getting ready for recording this video. As you can see, at this point it was $387. And as you can see, in June 15th of 2018, the share price was $391. So yes, in 3 days, we went back in the past 3.5 years. In addition to that, so many investment banks, so many smart people, so many economists are also predicting that the economy growth will slow down, which in very basic terms means that the GDP growth will slow down. So originally they were projecting that the GDP might grow by 8-9% approximately, but now the further we go into the future, so by the end of 2020, the projections are that the GDP will only grow by 1-2%. So, as you can see, so many different things that can be combined together, why I thought that the stock market will crash approximately in February of 2022. In addition to that, consumer confidence index went down, which basically means that in the past, people were excited to spend money to go to shop around, but now we got used to this pandemic kinda, now we're back to normal, now we're not spending as much, now we maybe cannot even spend as much because maybe some regions of the world are still closed, there might be still lockdowns, so people are not spending that much money, which basically means that companies are not making as much revenue. And these are basically all the theses which I will summarize once again in a minute, why I think and why I was so convinced that the market will crash in February of 2022, and apparently I'm very close to be right, very close to the truth of this statement. So, to recap all this long video, which I know I promised just 10-15 minute long video, in fact it turned out way longer than I anticipated, but this is just a recap. First of all, there was so much money in the system because of money printing and low interest rates. Because of this, so many individuals and companies, both of them, they started borrowing this, using this cheap money and increasing their debt, increasing their margin. The second thing is that so many new companies, especially companies that just went public in this last couple of years, they're completely unprofitable. If you remember, up to 80% of the companies that did IPO, they're completely not making any single dollar on their bottom line. So these two reasons are kinda already enough for the stock market to crash as soon as interest rates go up. Which basically means as soon as interest rates go up, the cost of borrowing money, the cost of serving the debt to maintain this debt will be much higher. I would say once again up to 10 times or even more higher if the interest rates go up to 2.5%. Because of this, so many companies will have very big financial difficulties, all the way up to filing for bankruptcies for some of them, and then this might create the chain reaction. Some companies that are very much like zombie companies that will be destroyed almost immediately as soon as the interest rate go up, but some of the companies that are making very small money, like literally pocket change, which basically means as soon as interest go up, they will not even have this money and they will follow into the bankruptcy as well, because interest rates will not be increased for like just 1 month. This will be measurements that will be the measures that will be taken for years. But the reason why the stock market still hasn't crashed, it is because it was maintained by the 6 largest companies: Facebook, Meta, Amazon, Apple, Netflix, Google and Microsoft. As long as these companies were not crashing, the whole market, the whole index, including, let's say, so S&P 500 for example, they were still not crashing because these companies, these were the ones that were balancing the companies that were at the very bottom, that were unprofitable, with the share prices going down, and majority, more than 56% of these companies, as mentioned previously, were already in the correction to bear market zone. And so basically there are 2 conditions that initiated the stock market crash as we see it right now. First of all, this was the anticipation, just the anticipation that the interest rates might be increased way more many times than it was originally told. So originally it was only 1-2 interest rate hikes, and now we have up to 4 interest rate hikes in 2022 and 2023, which once again will definitely increase the interest rates way more than just 1% as originally mentioned. And the second thing, that these mastodons, these big giant companies that were keeping the indices, all it took was just one of them to show weakness. And one of these became Netflix, as mentioned previously, as you can see. Just in 3-4 days, the share prices went down so much, it sent us back all the way to June of 2018, 3.5 years ago. And the reason why I selected February of 2022 as the beginning of the market crash, it is because when these interest rates increases were supposed to be announced. They were supposed to be announced around this time, but they happened earlier, and the stock market started reacting earlier. So this big correction crash that we're seeing right now started maybe like 1 week ago. So my prediction about February 2022 might not be extremely 100% accurate, but it's still pretty close. And for those of you who think that that's okay, markets always recover, it will only take a couple of years for me to get my money back if I invest at the very top of the bubble. That's okay, not a problem at all. Just take a look at this graph. A person who invested theoretically $10,000 in the September of 2000 will have $8,500 10 years later. It took him 10 years to grow this money and they're still below his original principal value. But it's even worse if you've invested in technological sector. A person who invested 10,000 in Nasdaq, and this is not even an individual company, this is Nasdaq, this is entire index, this is 100 biggest technological companies, technological related companies, let's say, so, okay, capital intensive companies. In the QQQ ETF, some of you might have heard about this. This person 10 years later from his original $10,000 investment will only have left $4,500, which is a decrease of 55%, which was not able to recover 10 years since he started investing. Make sure to diversify your portfolio. Don't listen to these YouTube finance gurus who are saying all you need to have like 3 companies, Tesla, Palantir, and I don't know whatever, this Nvidia, because these are the companies that only go up, stocks only go up. That's the rule. Don't listen to them. These might be good companies, but you need to diversify, because the purpose of investing is not just multiplying your original investment 10 times in 1 year. In fact, the real growth, the average growth, the median growth of the S&P 500 adjusted for inflation for the last like century is around like 6%, maybe even less. So getting 6% in 1 year, and it means that you're already pretty average investor. It's like, this is how much money you're supposed to get. And some people right now, they're like not satisfied because their investments made less than 10% in 1 month. So patience is what you need on investing. Patience is what you need on the stock market. I mean, patience, diversification, because long-term investing is not just about multiplying your wealth once again. It's about preserving your principal. It's about protecting what you have originally invested and then receiving adequate returns. Thank you so much for your attention, товарищи. Now go get up to $4,500 from Wealthsimple, and all the other, by the way, useful links will be down in the description.